Okay, so good morning, traders from a rather dark and cold England. Today is the 21st of January, and time is now 8:38 GMT. My name's Aaron Hill, and welcome to another edition of Technical Talk. So here's where we are currently in the markets. Asia closed another session in the red. Weekly performance in equities is quite painful. Japan's Nikkei 225 finished the week down by 2.1%. South Korea's Kospi and Australia's ASX 200 both concluded the week down by 3%. European cash markets, European cash equity markets are also on the ropes, clearly taking a lead from US equity markets yesterday. Now, the London's FTSE 100 is currently down 1.1%. Germany's DAX, as well as France's CAC 40, is also down 1.4%. Euro Stoxx 50 is also down 1.5%. As I said, this appears to be taking the lead from US equity markets yesterday, which, as you can see from the charts, has largely dipped since Thursday. So Thursday's session in terms of US markets, the Dow closed down by 0.9%. The S&P 500 dropped 1.1%. The Nasdaq and Nasdaq 100 dropped by 1.3%. Now, in terms of the technicals, we have a Fibonacci market going on right now. On the Dow Jones, as you can see, we have crunch below the 200-day SMA at 34,945, and the next potential downside objective falls in at the 1.618 Fibonacci projection at 34,341. Now, the main focus here really is the Nasdaq 100 at this point here, the Nasdaq Composite and the S&P 500. As you can see, there are clear Fibonacci clusters in play, and they are nearby current price action. As you can see on the S&P 500, let me just enlarge this chart so we can all see. We have a Fibonacci cluster between the 78.6% Fibonacci retracement at around 4,396 and a 1.272% Fibonacci projection at 4,449. So between these two levels, we have a Fibonacci cluster to be aware of on the daily time frame. All these charts are on the daily time frame, by the way. But we also, with this chart, we also have the 200-day simple moving average currently trading at 4,427. Now on to let's kick off with the Nasdaq 100. We have a clear Fibonacci, again, we have another clear Fibonacci cluster, and that comes in between 14,416 and 14,647. Of note, we have also punched below the 200-day simple moving average at 14,999. So do keep an eye on this Fibonacci area for a potential dip buying opportunity. Now, with the Nasdaq Composite, very similar, a very similar picture. We have a Fibonacci cluster between the 13,000, I believe that's the 13,683 level, and the 14,038 level. So between this area, we could again have another dip buying opportunity. Do note we did also come below the 200-day simple moving average in recent trading at 14,736. Now, an important point to bear in mind is the VIX. Now, let me just spin over to the VIX chart. As you can see, I have the VIX on the lower panel applied with the Bollinger Band indicator, and the S&P 500 above on the daily time frame. Now, the SIBO Volatility Index, or VIX, is a real-time market index, and what it does is it represents the market's, shall we say, expectations for volatility over the coming 30 days. But do be aware, the VIX is an annualized value. So what the main point I want to get across here is on the VIX, we have clearly punched above the psychologically important 20 value, and also punched above the upper 2 standard deviation value on the Bollinger Band. Now, when this occurs, when we do punch above the 2 standard deviation level, you can see at these points here, at this point here, at this point here, we do usually, once price closes back under the 2 standard deviation, value, looking to revert to the mean, we do usually see the S&P 500 form a bottom, and a dip buying opportunity usually presents itself. As you can see at these points here, as we close back in, we bounced from this area here. As we closed back under the 2 standard deviation at this point here, we had another opportunity at this point here to get long the S&P or S&P 500, or even risk assets, risk currencies such as the Australian dollar or the New Zealand dollar. Now, quickly over to the euro dollar currency pair. The main point I really wanted to get across this morning is to do with the weekly time frame and the H1 time frame. As you can see, we have bounced just ahead of the 113 figure. This was a noted move from this demand turn supply in previous analysis. So well done to anyone who caught that move. So what I really want to highlight now is the 113 level. We could potentially whipsaw below this psychological figure into weekly support at this point here. Now, weekly support, the upper edge of weekly support comes in at 1281. So this stands as a really good, solid area to help facilitate what's known as a stop run below this psychological figure. Now, just to emphasize the weekly support. So the weekly support is made up of a 1.618 Fibonacci projection at 1237 and a 61.8% Fibonacci retracement at 1281. And for any harmonic traders, you will note this also represents an alternate AB equals CD bullish pattern. And now, just to be clear, this was coined by Scott Carney. Do read his books if you're interested in harmonic trading. Now, so yeah, just be aware of the 113 handle. Should we come to visit this area, do be aware we could whipsaw below here and test and touch gloves with the 1281 and potentially whipsaw back above for a healthy, potentially healthy buying opportunity. Now, finally on to the pound. For those who read Friday's technical briefing, you will recall the team noted to watch for a 136 breach, and this is on the H1 time frame. As you can see, we did indeed see that, and we have seen the 136 figure offer some resistance. And this was largely due to the daily support at 136.02 at this point here, looking somewhat fatigued, and also with room on the H4 chart at this point here to potentially take a run at demand from 34.28, 34.44. In addition to this, we also formed a shooting star candlestick pattern. Now, for any candlestick enthusiasts listening, this is generally considered a bearish signal at resistances or on sell-on rally scenarios, if you will. But as you can see, we did form a shooting star at resistance on the H4 between 36.22 and 36.46, which also came within a whisker of the resistance at 36.68. So we have room to punch lower on the H4, and we've also clocked below the daily support at 36.02. So we could potentially be looking at a follow through to the downside towards H1 support at 35.33 and the 135 handle, which conveniently aligns with this daily daily trend line resistance turn support, and this is taken from the high of around 42.50. So do be aware. So do keep an eye on out for this possible scenario. Okay, that's a wrap from my side. As usual, any questions or comments, please email the research team at marketanalyst@fpmarkets.com. Thanks for joining. Have a productive Friday and a relaxing weekend. And I'll be back online bright and early Monday at the same time. Thank you very much.